Patrick, show us some of those bad charts, buddy.
Hey, hi Dale.
Hey,
Ha-
great to, I know time flies. Seems like Groundhog Day, doesn't it? A little
Is
bit?
it 3 months since the last time we
Yeah.
talked
Yeah,
already?
that's kind of like what the cycle is. 3 to 4. It's
That
amazing.
is incredible.
It
That
goes even faster the older you get.
no
So
kidding. It's
appreciate the
like
time. Yeah.
that's right because your brain has more and more input. It's always working. So when you're not idle, remember when you were a kid there, the summers they used to last forever
Yeah.
because you'd be just like, you wouldn't think no stress, nothing, just have fun and that really slows down the time.
So what's this that we're looking at, my trading
Well,
warrior
this
brother?
the initial claims
Initial
for me is
claims.
probably
Oh,
the most important macroeconomic
yeah.
indicator. And I'll tell you, look, and you're gonna probably answer me this question. Okay, so here you have the initial
COVID.
claims from
Yeah.
19. Wait, my panel.
Goes
Let me
in the
move my panel
70s.
from the 70s. Okay, so look at this. I've looked at so many charts, Dale, that right now what I notice when I see a chart, I just don't see a chart, and they're like, when you're doing something new for the first time, you're overwhelmed, so you don't see the big picture. You're there, okay, where's it going next? But I've seen so many charts. When I popped up that chart, I think maybe a month ago, I had a revelation. I'll tell you exactly what that chart looks like. And you're gonna fall off your seat, and then we could discuss which one leads which. I'm gonna pop up the gold and silver miner index of miners. So it's an index. So they rotate out the least performing one. It's the ASA
Yeah.
one. And here it is. Here's the ASA chart, the gold and silver. And look at that. Let's bring your eyes, guys. The amplitudes, yes, are different, but look, bring your eyes here back in the 60s.
Yeah.
It tracks, it probably leads the initial claims, right? And look at this. It follows to pretty much a good heartbeat the initial claims. As initial claims go up, the
The
miners
miners
go in
go up.
uptrend. Here, initial claims go down, down, miners get sold off, or it's the inverse. It's the
It's
macro, and I'll show you
rates.
another chart that to complement the macro landscape of why this is probably happening. And look at that spike up
Yeah. Yeah.
in the initial claims in 2020. Remember that March Madness, and then after
Yeah.
that they go up. And look at that, look, it's tracking to
Exactly now.
pretty much sync. So I know when I zoom out, the correlation, yes, it's not 100%, but if I have a breakout in initial claims and I have a breakout, some positive stuff happening for the miners, then I know I have a higher probability chance of having a successful run. And as a chart trader, it's not about percentage moves. And I'm happy you guys are like, you guys do Forex and you understand that the most. People always tell me, oh, well, look, gold moves 10%, 20%, Bitcoin move 1,000%. But look, Forex traders, currencies don't move hundreds of
No.
percents, but you can make as much money trading currencies than you could anything else. It's all about position size. It's about risk and money management, where you put your sell stop, where's your profit limit, right? So it's not about the percentage move. It's about identifying the higher
Being on the
probability
right
run,
side.
right?
It's all about being on the right side.
Yes, yes. It's all about
That's it.
that. Yes, the right side. And after that, fiddle around with your position size and you'll be able to leverage the move. So the miners, I'm pretty sure maybe this is a huge pattern, but it's not, look, they're not there yet. There's something
Would
really,
would you
really,
consider, Patrick, especially the silver miners? Um, they've come off pretty dramatically in comparison with the physical. The gold miners have held up better, although GDX went from 36 to 30. But I look at AG is almost at new lows. SILJ is at major support. And I'm not sure this silver correction is completed unless we get back above 24 and
well,
a half. Why,
look,
I know people ask you this all the time. Why are the miners giving up so much on this pullback in
yes.
silver?
Well, this chart is part of it. I'll show you two other macro ratio charts that are and people are gonna start understanding that why the capital flows aren't going to miners. Look, this is SILJ, guys. Look, silver miner, gold miner, I don't care. Look, SILJ tracks the ASA, the gold and silver miner index. I could have put Pan American. Remember Pan American? This one has a little bit more data.
Mm-hmm.
And let me just put that on the log scale to match it and zoom it down. And look at the as a chart. It's the same thing, guys. Look, there's no, if you're precious metals, gold or silver, it's pretty much the same capital flows. Look at driving these charts. So even if SILJ, I don't have data going back to the 2000s, and I could assume that SILJ chart would have practically looked like the gold and silver miners chart if I would have stretched it back.
Mhm.
So I'm gonna circle back. I'm gonna show you the gold to SPX. Here's my gold to SPX chart overlaid the initial claims, and that also tracks the initial claim. So gold's outperformance of SPX of growth stocks increases when initial claims start rocking it upwards. And I think the initial claims is something the Fed probably looks at closely, and they react probably monetary wise, either lower the rates or whatever. And that really spooks them, initial claims spiking up, right? Isn't it one of their
That's
legal
what they
mandates
want.
for
They have,
unemployment?
well, that's what they want now. They want to create unemployment. They want initial claims to go up. It's been stubborn.
Well, if it goes up, then gold's going to outperform SPX. So that's where you want to go long. So look, gold versus SPX follows that.
Okay.
If I overlay, if we know that gold SPX tracks the initial claims, and we know that as a chart tracks the initial claims, those are huge parts of the equation. And I'll show you another crazy chart. It's
so that, that really, so something that precious metal traders should pay attention to is, they probably own stuff now, but the time to get aggressive, and we just looked at initial claims, so well, is when they start going up dramatically. That would be when the Fed would pause and maybe pivot, which is constructive. Sounds like it's all about rates. Everything is all about rates.
It's about more than rates. It's about the destruction of purchasing power. Okay, maybe that's the best chart I could show you, because essentially it's a precious metals react, because they're just rocks and they're just something static. They react to the fiat losing its purchasing power, and essentially the purchasing power of fiat is its strength or weakness versus other currencies,
right?
But also that it adjusted for inflation, and that's really the purchasing power, how it is. So here's I got.
So do you think? And I know you've talked about it before. Do you and Kevin think that we could have a dollar rally, which we had not so bounce so far, and a continuation of a bull move in gold?
Definitely, 100%.
Simultaneously.
Yes. Okay, I'll show you that one there to answer the. Move that here. I'll put the DXY, and here I'll put on top. I'll put just gold. I'll just remove. Well, gold's at the bottom pane. Perfect. So here's what we got. We got gold in the bottom pane. We have DXY on the top, and this is why people get confused, because gold does not track necessarily the DXY. It tracks the inflation adjusted version of the DXY. Look at this here. When gold was bottoming, look at that here. Huge bottom right here. I'll zoom in there to really show you in the 2000s. Huge capitulation bottom. Look what the DXY did. Kept going up, but gold refused to do a lower low. And DXY kept going up here. It's here. It's about at 116. It dips. It goes, even overheats to 120. But gold was going up along the DXY along here. Here, look at this here. Another region. Look at the DXY going up. See that DXY region here going up? And gold did not care. So
great
this is what gold reacts to. It's the DXY divided by PPIA, a proxy for inflation. Now look at this thing. Okay, so it's invert. So this, I'll invert the gold chart. I don't know. I'll put them one on top of the other. I'll change the color to red for my gold chart, and look at that now. This should really, people should really say, oh my goodness, this is what gold tracks. So while the DXY, we know in 1985, the DXY, it was a plaza chord and it went bonkers, right? And it did a new high. It did a higher high in the 1980s, mid 85, than it did in 1970s, the DXY. But inflation, it was so much inflation adjusted that its purchasing power was down, and gold, look, it tracks that. Look at that. It tracks that. So now you got another clue, guys. If the DXY adjusted for PPI is still in a downtrend and not breaking out, and it seems seems like just a back test, pull flag, right? It depends. It's not. This has to break down here. Look at the gold chart, what it's been doing. Actually, the gold chart leads. Look. Okay, that's another thing, Dell. Whenever I look, people always look, okay, where's gold going to go? And then you start looking at macro stuff, other charts. But look, the highest of the pyramid is the gold chart. It's the leader. It sniffs out. I'll just show you here. Look, it sniffed out. Look, when gold broke out in June of 2019 here, or where's my gold chart? Is it that one? Here, in June of 2019. Right here. Hold on. Put this line here. When gold broke out here of its, well, it's inverse, guys, right? I'm sorry to confuse guys, just to keep in mind. When it broke out in 2019, in June, the DXY adjusted for inflation was still going up, but gold was telling us that that was only going to be temporary. It led it by 5-6 months. And right here, gold peaked before. So here in August of 2020, gold peaked while the DXY adjusted for inflation was catching up, right? The producer price index, whatever, how they calculate that, the data was coming in, right? Higher oil prices, that's all lagging stuff. Now you got to look at the gold price, because gold, if it breaks out of this 2-year consolidation here and it breaks out upwards, it's telling us that there's a high likelihood that the DXY adjusted for inflation has a much higher chance of going down. But I think, like, talking about this out loud, people who want to play the DXY or play inflation, they should actually look at gold's price action, and that should give them some clues to where the DXY's relative strength versus the euro might be going, but also where inflation could be going. So let's say the DXY does go up and it hangs on versus the euro, right? Because the DXY essentially, it's its performance versus the euro. It hangs in there versus the euro or outperforms it. If some crazy thing happens in the PPI, oil prices start going up and outperforms that strength of the US dollar versus the euro, then gold's going to price that in and gold's going to go up.
Okay. Do you have your breakout in the Dow gold ratio?
Yes.
Or did it back off from the breakout?
The Dow is the weakest. So people look at the NASDAQ, and I was looking at breadth for major US indices. Seriously, other than the NASDAQ, it's not looking good at all. The Russell, the Dow is not looking good. The SPX, not that bad. So I'll just remove indicators, remove my drawings. Look at that. That's the Dow versus gold. There is nothing. It broke here a line of support, so that's momentum. It's pretty acute. So it's still trying to go upwards, right? It's not dead yet. Look at this thing here. Oh my goodness, Dale.
Yeah, it's on the verge. Yeah.
You could even make a case that if it closes the month there, it's losing momentum. It's not the final breakdown line, right? It's not the horizontal breakdown line that confirms that the momentum but it's heading into neutral territory. So when you're in neutral territory, you have a higher, now you don't have the tailwinds, right? You're starting to get headwinds, and that could be a big breakdown. It could be. And look at this level. Look where it halted. We're back here at the 1972 top for the gold versus Dow. Well, here, I don't like too much before the 1970s because gold was kind of pegged, but this is topping area for Dow's outperformance of gold. And you cannot be bullish, the Dow outperforming gold, until it gets back above this line. The Dow has to get back above this line to tell us that we're going back into a growth cycle for 5-10 years. It's more on the verge of breaking down. I could do the Russell.
Yeah, I know the Russell's been the weak sister.
Yes. There you go. Look, the Russell's like even lower below. I'll put it on the candles. You can even make a case that it broke down and now it's just bear flagging below a breakdown line. That's not good, Dale. You don't want to be there.
Yeah.
You're just
so
not, you're on the wrong
how
side.
are you telling your subscribers to position themselves at this juncture? Are you saying, wait, put partial positions on, It depends on, leverage or physical. What are you advising people that subscribe to your letter?
Well, right now it's in no man's land. So you really want gold to break out. It's too close for comfort. And especially now we're close to the end of the quarter. Some crazy stuff could happen in June, right? Here's my gold to SPX. Here I have a crazy pivot line at 0.5 half. And for a few months it tried, look at this, even here, 0.47, it tried to get back above. Look at the selling pressure. So every time everybody thought gold was breaking out, it got sold into. But it's not doing lower lows. It's not doing lower lows, and it's hitting on that wall. So if ever we get a close, even a solid close above 0.479, 478, ideally 0.5. So if I get a monthly close here, man, you got to get uber bullish. Then you take I don't want to say huge, but then you load up on gold. Then you load up maybe on the miners, but primarily on gold. Because you got to remember this is a gold versus SPX chart. Both can be going up at the same time, right?
Right. Yeah.
So you don't want to short the SPX. And I don't like shorting US equities because the purchasing power destruction that they'll do to nominally keep it afloat will put some type of floor under the US equities. But on the flip side, gold will price in that crazy destruction of purchasing power. So you want to go long something that's not bright, that's going to run up more, because if this ratio goes up, even if the SPX goes sideways, that means gold is outperforming SPX, right? And that's where you want to be. You want to be in the asset which is outperforming the other assets, even if both go up. That's often people say, oh, Patrick, I love Bitcoin. Bitcoin's going up. And then let's say I do BTC USD.
Yeah, it looks pretty negative to me.
Divided by NVIDIA.
Oh, NVIDIA.
Yeah, but look, there's no reason to be long. Here's a blow off top for Bitcoin versus NVIDIA. It's been topping versus NVIDIA since 2013, and now it broke down from this long-term trend line, and now it bear flagged. Now it's almost, if it closes the month below here, it's breaking down below this previous low. This should be telling you something, that any Bitcoin holder, nobody should have been holding Bitcoin at all for the past 4, 5, 6 months. And they should have been at holding NVIDIA, which is outperforming Bitcoin. And that's what's kind of sad, people holding on to narratives. And, it's the next best thing since butter. Well, when the capital flows start leaving your sector and go into another sector, as a chart trader, you want to make money, you want to be on the good side of the trend.
Very hard to have ridden NVIDIA all the way up there. It looked overvalued before the greatest earnings report in the history of mankind. So, I don't know about you, Patrick, but to me, I'm rarely there for it's usually the end of the moves when they get parabolic. I could count on one hand how many times I've been there for moves like that. And I think that most people that are either greedy or naive. And that's what keeps them in for that long. Because anyway, just my take.
NVIDIA,
envious of the move.
well, I have a trick to measure greed and fear. Just look the distance from the 3-year moving average. So the further you are away from the 3-year moving average, or any moving average, so you could put a moving average that fits your trading style, right? Because FOMO, you could have FOMO on the short term. You could have macro FOMO, like crazy stuff. NVIDIA is able to stretch from 100% to 200% away from its 3-year moving average before really starting to top out. So right now, a greedy target for NVIDIA would be 560, 570. So if it's able to extend itself about 200% above its 3-year moving average, it would be able to tag. Here, the FOMO would be nuts. Anything NVIDIA above 500, the FOMO would be crazy. But when you look at this chart, the low risk entry for NVIDIA was after 2007 all the way to 2014, and even here 2015, that 7 to 8 year base, when the price was coiling here around the 3-year moving average. There's nobody wanting NVIDIA here. There was no AI. There was nothing back then. That was the time to go long NVIDIA at sub $10. That was the time. Now,
So
the fact
so
we're
is it
talking,
time to own gold and silver bottom line? Or would you wait? Because I know, so, just my opinion, I think we'll see the 1800 handle in gold. I think we'll get a
well,
bounce. So
if you,
that's just I'm wrong all the time. All right. So, and actually think that cycle-wise, July, this is to you, Barry, cycle-wise, July, August is the time period. And that's just, measuring how long the rally lasted in time to a percentage of that time. We should have, 2-3 months of consolidation.
yes,
So
well,
I'm
yeah.
trying to, understand what the strategy. Do you just sit in cash right now and watch the charts? Do you buy some gold? Do you buy some silver? The
No, no. Yeah.
gold silver ratio looks like it's turned down again from 85. So maybe that was just a bounce there, and now silver's gonna lead again. People are talking about the warehouses in Comex being
Ah,
even,
that,
yeah, they don't have enough to, put in a gumball machine.
that's total noise. Don't, this
That's
is, it's
noise.
crazy. This, listening to
The
comic stuff
stocks,
and
yeah,
it's noise. It makes no sense. Look at the price charts, guys. Who cares? Look, I had these people talking about, oh, Patrick, recession, silver's going to crash, all that.
yeah.
Look, I have the
It's threatening a
recessions here. It's
breakout.
those gray overlays or green. I'm a colorblind. Look
Oh
at
yeah,
silver price. Silver likes to bottom in the abyss of a recession. Look, March Madness. Look, it was a spike down.
yeah,
Look, the 2008 in the abyss, not at the beginning, not
yeah.
at the end. By the time we know about the recession, silver will tell you with a breakout that we're out. Look here, I could have drawn a trend line. Look at here, bottom 2001. That was the bottom for
Yeah.
silver. 1991,
Yeah.
it bottomed at the abyss of that recession. Doesn't mean
$5, $4.
here, look at 1982 in the middle
Yeah.
of the recession here, 1980 in the middle, 1974 in the middle. So,
Oh, take me back to the 70s.
Jesus, Dale,
Come
look
on,
at that.
man. Were you around in the 70s?
I was born 76 right here.
Okay. I was having a lot of fun before you got born. Anyway, so yes, and
Wait for
this,
this line,
yeah,
Dale, wait for this line to break out. Silver right now, I think the
yeah,
market priced in a high probability of a recession in 2023. But the fact that silver now is tagging a breakout line here, I think whether officially or not we had one in 2023, I think the market's telling us that the next recession is not anytime soon, because if we'd be in a recession right now, if there'd be recession fears right now, the market the silver
silver
chart
would
would
have
look like
broken out.
this, guys.
Yeah.
So who cares about recessions? Who cares about COMEX? If silver's breaking out, the recession could be in late 2024. You know how this chart could look like in 2024? I'll just do the last one. I don't want to FOMO people into buying silver, but
Do
remove
it, man.
drawings. Here, I'll just put my recessions overlay. Look, the silver chart, if it breaks out above this line here, guys, this is what could happen in, where is my
Yeah, that's
squiggly
how
line?
you get big
Where's my
numbers.
squiggly? Where's my squiggly line? No? Okay, this one here. This could happen. And then we get the recession in 2024. This, if ever silver close above here, there's a reverse symmetry move back
Does
to
it
all-time
give you
highs.
48?
48, it could overshoot. This could happen in 2024 if ever, and crash by November 2024, and the recession could actually be here. So if people are in fear mode, let's say silver does have a confirmed breakout here above this breakout line, and it closes, and people, oh, I'm not buying silver. There's gonna be a recession. It's gonna crash. Well, they're gonna miss all this move because they're living in fear.
Yeah.
Silver's gonna tell us once it starts breaking down here. Look, in 2008, it broke down. I'm pretty sure in August of 2008, when silver started breaking down, officially the recession was nowhere close to being diagnosed, right?
Yeah.
When was it diagnosed, that recession in 2008? It wasn't in August of 2008, right? Nobody, I think everything was contained in 2008 in August. Yeah. So you gotta.
It could be considered a cup, and this is the handle of the cup.
Here, yes. This is a bullish expanding wedge. This
Yeah.
here. This is
Yeah.
super bullish.
But
This is a
guys,
uber bullish pattern.
you want
bouncing.
my guess? 22 to 20. Just buy it.
Well,
That's what I think.
I just don't want to get trapped. Possibly, look, it depends. If you want to have bragging rights and say, I bought close to the low, fine. But look at this. It's like months could go by. So let's say it goes back in here. Let's say you do buy the
Yeah.
low here, and
Yeah.
then it goes here. And then after that, it decides to consolidate for 5 more months. And then there's another instrument going bonkers that the other, like sugar or some other things breaking out. And then you say, oh man, yes, I did buy low for silver, but it's going sideways for another 6-12 months. Nobody wants that.
Yeah.
Like, I don't care about buying the
If
lows.
you're not underwater, I don't care if it goes sideways.
Because unless you have unlimited capitals, if your capital's frozen in something that's going sideways, you're not losing money, but it's going sideways and something else is breaking out, then that's opportunity cost.
Well, you shouldn't have all your capital in one idea anyway. And if you don't have enough capital to be in more than one market at a time, you should think about closing your account.
I 100% agree. Yeah.
All right, buddy. So let's not make it more difficult just because of financial constraints that some people might have. They are not suitable for even being in the market. They should just go buy some physical and forget about it, in my opinion. Anyway, Patrick, some great looks, and this last chart I think was the key. Really is a convincing longer term bullish picture, and who knows when it's going to break out. Could be 6 months, could be 6 days. So thanks for tuning us up on that big picture look there.
That's right. Guys like this, guys. This high.
Right. Hey, Patrick, I have a tip for you. Try decaf.
Jesus. Yeah. Okay. This is me not on caffeine. Here's a reasonable target.
All right. There you go. All right. Anyway, who knows? Anything can happen. And really appreciate the work that you and Kevin do and that you come in here and share it.
Yes.
Thank you very much, my trading warrior brother, for coming back.
Always great catching up with you, Dale. Thanks.
Oh, all right. So best place for people to follow your work, subscribe.
Yeah, Twitter, guys, Bad Charts One on Twitter, all the free stuff, and the paywall stuff is at northstarbadcharts.com.
Yeah. And Kevin and Patrick are an example of this kind of math. 1 + 1 = 11. They're a great team. They're a great team. All right, buddy.
Thanks, Dale.
Good hunting.
Thank you.
Rooting for you. All right. Patrick Karim at Bad Charts One, everybody. And that's a wrap. You could join the team in 15 minutes on the Morning Edge. Remember, don't just count your pips, count your blessings. And riding high in April, shot down in May. But boy, am I gonna be singing that tune when I'm back on top in June. Adios. Don't just count your pips, count your blessings. See you, Alexandros, Patrick Karim, my friend. See everyone later. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.